Welcome back. Now, at the full-year mark, Attacq grew its distributable income per share by nearly 26%. This as, albeit a small dip, the Mall of Africa owner still enjoyed high occupancy and collection rates during the period, along with continued benefit from the Waterfall City transaction with the government employees' pension fund impact. The final dividend sits at 87 cents, reflecting an increase of 26%. Company's CEO, Jackie van Niekerk, joins us with her assessment of the performance. Jackie, thanks so much for your time this afternoon. So the annual period, a year where there was a lot of strategic efforts that came full circle, right? We're seeing the full financial impact of the GPF transaction, first full period of Attacq solely owning Mall of Africa, also first full period of that Africa rejig. Talk to me about how that has translated into your balance sheet.
Yeah, thank you so much, and good afternoon. It's definitely translated, more than what we've expected into our balance sheet, and there's a big combination of everything coming together. A few years ago, we said, listen, we need to de-gear the balance sheet. We need to think about how we're going to roll out Waterfall, which came about the GPF transaction. Year and a half later, you can see the full effect of that transaction. But I think deeper than that transaction was also the transformative effect it had on our debt strategy.
Yes.
So our interest cover ratio has improved to 2.95 times. We've got low gearing at 25% gearing ratio. It also enables us to went for our first credit rating through GCR, which we got an A+ credit rating, and we could, through the DMTN program, go raise a further 750 million rand worth of DM notes. So that all allowed our debt cost to come in lower, which had a material impact. That's got a long-term sustainability impact for our earnings and then also for our balance sheet. So we've got firepower to roll out Waterfall alongside our partner, being the GPF, but we've also got long-term or medium-term lower debt cost, which has got a massive big impact for our shareholders and earnings.
And we'll zoom into your new development pipelines in just a bit. I want to talk to you about occupancy levels and collection rates. That also quite healthy. I want to chat to you about what you're seeing playing out in the office property sector, right? One would expect that sector to be under pressure, but we are seeing some sort of a rebound across many property players. What's taking place there in your portfolio?
Yeah, it's a very interesting observation you've made. So what's taking place is I think corporates are understanding what is their way of work. Before COVID, we had a way of work. After COVID, people were figuring out how are we going to work? Is it from home? Is it hybrid? Is it full-time back at the office? And I think the strategies of the corporates are starting to solidify. We understand what we are. And that's now starting to, okay, now what is our space requirement? Coming out of understanding what the corporates want. So, and I think another big component coupled to that is our strategy is precinct. So think about Waterfall, we own, control infrastructure, we build the roads, we fix the roads, we build your electricity. So everything we do, we control. And then also the safety aspect, we also control to a large extent. So in Waterfall, clients are saying, you know what, I can still have an office, have a lifestyle, my staff can walk to a mall, they can sit in a park, have a lunch. So there's a broader lifestyle element that we are offering. So clients are, the trend is clients are figuring out, understanding what they want, the way of work, and we're also able to provide a world-class infrastructure and a safe infrastructure for our clients. And I think that's both very well and then creating that demand in Waterfall for offices.
Yeah, and it's really been interesting to see the kind of rejig and the reshaping of office property portfolio, especially in Gauteng, where we've seen a trend of, Gauteng office property really declining with the move into your KZNs and your Cape Town. So really interesting to see what's been playing out on that front. I want to now take a look at your expense lines. The last time we had a chat, you talked to me about municipal charges really affecting that expense line, that cost line. But I do know that the group is involved with a lot of renewables, a project with your renewable energy now contributing 9.1% of your total energy mix. Has that taken some pressure off that cost line?
Absolutely. So you'll see, last year we were in the 80%, our overall recovery ratio of our all-in utilities. Now it's improved to 94%. The municipal, and there's a few factors contributing towards that. Is we've placed a lot of emphasis in the way we measure. We've put the digital metering system in place, but then we've also rolled out a significant amount of PV on the roofs, completing this year 3.3 megawatts in addition to our portfolio, and that's now rolling out, and we're seeing the benefits of a recovery ratio. So our shareholders are definitely benefiting with the strong return and the improved recovery ratio through our greening efforts and also our efficiency efforts that we've put in place in our portfolio.
And development activity at Waterfall City, Jackie, has been pretty robust over the financial year, with projects totaling 90,664 meter squares of gross lettable area at a combined cost of around 2.3 billion rand. I want to talk about uptake, right? We do know especially around the residential side of things, we do know that households have really been under pressure. But I mean, 12 months after the first rate cut, we got that first rate cut in September 2024. What are you seeing? Are households, South Africans, actually buying property?
Yeah, well, we can see it. So I'm going to break it down in Ellipse development. We're nearing the completion of the fourth tower. We're over 90% sold out. So that has been an exceptional, well-received development in Waterfall. We then launched the marketing launch of Aspire, which is 217 units. We're 50% sold, and we launched that in May. So we definitely see, coupled with the rate cut, but even throughout the cycle of high interest rates, we have seen people gravitate, and again, I come back to the precinct ownership. It's safe, it's secure, it's high quality living, and I think some people are saying, you know what, I don't want the upkeep of a stand. Let me, migrate to a unit. We've definitely seen that as well, and then very good investment from a rental pool point of view. So a lot of factors driving, but definitely interest rates helping a lot, and we're seeing the units being sold, and we. Personally, myself, I've always been surprised by how quick the units have been selling.
Yeah.
But again, it bodes very well to the precinct play, and what we offer more than just the unit. It's a lifestyle that we're selling.
Yeah, I guess it also just speaks to the quality of assets, Jackie. And then just before I let you go, talk to me about what you're seeing playing out in Mall of Africa. Retail property has boded quite well over the past few years. Now that you solely own that retail center, walk me through what's been playing out over the past few years. Have you been able to fill up those vacant shops as well, if there were any?
Yeah, Mall of Africa, our crown jewel. Firstly, we've got amazing teams running this mall. What they're always cutting edge of what's happening in retail and all the latest and greatest. So we've got a very, very high occupancy in Mall of Africa. We've had a lot of tenants upgrade their stores. We don't want an old-looking store. You want the latest and the greatest store. So a lot of our existing clients have upgraded the stores. We've seen the health and beauty category trading incredibly well over the last year, shooting the lights out. We've had Checkers expanding the Checkers Hyper, the Woolies trading really well, even the Pick n Pay trading very well. So department stores, groceries, health and beauty, upgraded stores, and we're now embarking on the 10-year renewal cycle. And we're quite excited about that because, again, retail is an ever moving, trends are moving, and we see what is the opportunity to bring in new exciting brands into Mall of Africa. And you'll see the hoarding is up. So if you go next visit to Mall of Africa, you'll see Kate Spade's opening up, Coaches opening up, so there's mid-lux brands opening up. So come and buy your handbags from October. We're definitely excited about bringing fresh, new luxury brands, but then also, making sure that our existing brands are upgraded, and they're all trading very, very well. So we're very happy with the performance that we've achieved over the last 10 years at Mall of Africa.
And talking about new brands, we do have Walmart also launching in South Africa pretty soon. So it'll be interesting interesting to see where it positions itself in the country. Jackie, unfortunately, we have to leave it there. Thank you so much for your time and taking us through the year that was for Attacq. That was Attacq CEO Jackie van Niekerk.